Finance Ministry projects the South Korean economy to expand 3% this year, driven by chips. With more on Press Perspective today. Hello and welcome to Press Perspective for this Wednesday, July 15th, here in Seoul. I'm Min Sun-hee. The Korean economy is riding a wave of optimism powered by a blockbuster Nasdaq debut by chipmaker SK hynix and renewed confidence in the country's growth. Today we explore the latest events and what they mean for markets here. For this, I have freelance journalist Raphael Rashid here in the studio. Raphael, welcome back.
Thank you for having me.
I also have Professor Oh Joon-seok at Sookmyung Women's University live on the line. Professor Oh, as always, it's a pleasure.
Good evening, Sunny.
Right, Raphael, let's start here. Let's start then with details of SK hynix's stellar Nasdaq debut last Friday and its broader implications.
Yeah, SK hynix rang the opening bell at the Nasdaq market site in Times Square last Friday. And by the end of the first day of trading, its American depository receipts, ADRs, had jumped 13%. The numbers behind that debut, I think, are quite extraordinary. Of course, SK hynix raised $26.5 billion, pricing its ADRs at $148 each before they opened at $170 and briefly touched, I think it was $177. So that makes it the largest ever US listing by a foreign company, overtaking the $25 billion Alibaba raised, I think it was in 2014. The chairman, Che Tae-won, of course, when he rang the bell alongside the chief executive, Kwak No-jong, and he didn't hide his satisfaction, telling CNBC at the time it was a kind of like a dream come true. And I think the scale of demand tells its own story. Investors sought more than 7 times the number of shares actually on offer. And of course, what's driving this is the AI boom's insatiable appetite for these high bandwidth memory, the specialized chips, of course, that are needed inside the processors powering AI systems. And SK hynix now controls more than half of the global HBM market, and Chair actually said that, you know, when customers hear that the company plans to double capacity within 5 years, they still tell him it's not enough. This, I think, the proceeds, of course, aren't just a trophy per se. All of this is earmarked for expanding manufacturing, principally the new Yongin semiconductor cluster, and advanced packaging facilities in Cheongju, alongside the equipment such as ASML's lithography scanners. And I think, you know, what are the implications of all this? I think this listing gives American investors, of course, direct access to a company that had almost, you know, it's been impossible to ignore this company given what's going on in the AI supply chain. And analysts say that, you know, it could help close the long-standing valuation gap between SK hynix and maybe its US rival Micron. So, you know, we also saw Seoul's own exchange has already been reshaped by all of this in general. SK hynix crossed the $1 trillion market capitalization mark for the first time, I think it was in May, and its share prices have, of course, risen, I think it's 7-fold over the past year.
Right, and against this backdrop, Professor Oh, pundits have been speaking about a multi-billion-dollar boost for the South Korean foreign exchange market as SK hynix prepares to bring home the proceeds from its blockbuster Nasdaq debut. What's your take on this talk, keeping, of course, in mind the weak South Korean currency?
The fact is that a listing ADL on the Nasdaq made it possible to raise the $26.5 billion US, which could be a vital safety valve, preventing the won from breaking much more dangerous ranges. However, behavior in the macroeconomic spectrum of market dynamics, I could say it should be viewed as a temporary buffer to cap exchange rate volatility. Considering inflow of the dollars, theoretically, yes, it could be a positive sign. To finance its aggressive domestic semiconductor cluster, I mean that as Mr. Rashid commented, investment of infrastructure and equipment build out, SK hynix should convert a massive portion of this dollar proceeds back into Korean won. This therefore creates direct structural buying pressure for the Korean won in the foreign exchange market, but I would say it could be a minor temporary rebounds like showers in the monsoon season, which could change the temperature, but cannot change the season. What about outflow of dollars? Red light is on. Korean M&E's increased overseas investment in the form of foreign direct investment and foreign portfolio investment by both national pension service and retail investors are creating supply-demand imbalances, keeping the dollar heavily supplied outside the country. Moreover, foreign investors have also maintained a net selling trend on the Kospi for the dampening won support. Elevated geopolitical tension in the Middle East and concerns over trade policies are sustaining high oil prices, adding to holding preference of dollar as safe haven. In addition, if I were in that position as a financial expert, simply maximizing the long position, that is the best policy. So it's highly possible that a substantial slice of the 26.5 billion US dollars will not be converted into Korean won strategically. SK hynix requires vast dollar reserves to pay for overseas equipment imports. In this sense, around the $1,500 currency rate psychological line could be maintained.
Right, I see. Meanwhile, Raphael, the Bank of Korea back on Monday dismissed talk about the semiconductor upcycle reaching its peak. This followed a decline in the local bourse on the same day. What exactly did the central bank say?
Yeah, as you just mentioned, the BOK has firmly rejected the idea that the semiconductor boom has already peaked. And I think that question had been gaining a bit of traction after a rough start to the month. Samsung fell more than 9% on the 2nd of July, and SK hynix dropped nearly 15% as investors grew, I think, a little bit more nervous about debt-funded AI spending, stretched valuations, and the possibility of a memory chip glut. In a written response submitted Monday to People Power Party lawmaker Park Sung-hoon, the central bank pushed back, describing the current market as one of clear supply shortage, essentially, where demand for these AI infrastructure investments is vastly outpacing the industry's ability, essentially, to produce these chips. Everyone wants them. The bank's reasoning centers on the HBM, specifically high bandwidth memory. It said that these high performance made-to-order products take considerably longer to ramp up than conventional memory chips, which structurally limits how fast the supply can essentially expand. And crucially, the Bank of Korea argued that this upcycle is different in kind, not just degree, from previous upcycles. It's being driven by a fundamental restructuring of the AI industry ecosystem and fierce competition investment among global tech firms, of course, rather than a simple repeat of past inventory cycles. And the BOK did point to some numbers to back up what it was saying. This expansion phase has now run for, I think it's around 40 months, well beyond the average 29 months duration of the 5 previous upcycles between the years 2000 and 2020. It also cited forecasts from JP Morgan, Goldman Sachs, Morgan Stanley, all of which expect the global chip boom to continue at least into the next year. So I think, beyond this shift in tone, Korea's export data, where we see semiconductors have made up, I think it was 1/5 of total exports in 2022, and of course that's gone up significantly. And then now we see, June's monthly total broke $100 billion for the first time.
Right, indeed. Staying with this, Professor Oh, I wonder, what's your outlook with regard to the global chip demand going forward?
There might be a different opinion, but I also said the global chip industry is approaching on the peak. The global chip industry is in a massive semiconductor super cycle with revenue projected to surge 90%, driven entirely by AI and data center infrastructure boom. Structural supply shortages are stripping production capacity. This deficit is expected to trigger a severe memory supply crunch, keeping prices high and fueling growth well into the next year at least. And then what would be over the great mountains is like a familiar scene in John Steinbeck, a young boy asking old Chitano. This growth reveals a deep structural divide as AI and data center chips surge, while consumer volume remains muted. Demand is transforming further into edge computing. Edge computing decentralized data processing by bringing computation and storage closer to the source. Multi-billion-dollar data center expansions are bottlenecked by local power generation limitations. And the AI boom and the massive cloud workload have collided with a hard physical limit. Fragile regional package supply chain and low substrate availability are highly vulnerable to a localized export control, which could create severe compounding bottlenecks across global technology and manufacturing sectors. Despite broad consumer tech slowdowns, the automotive sector represents durable long-term growth as software-defined vehicles require advanced processing, sensors, and power management chips. Even though the amount and speed of a super cycle hold to grow, but after the next year, the growth rate would be marginally decreasing rate, I may guess.
Right, I see. After next year, then, after 2027. Raphael, I'd like to circle back to talk about the stock market. I mentioned back on Monday there was a decline, but on Tuesday, yesterday that is, there was an even more dramatic decline before a rebound today. Could you walk us through that?
Sure. I mean, I think it's been quite the roller coaster of a week over the past few days. I mean, if we just look at Monday, as you mentioned, I think it was quite brutal. The Kospi had plunged 8.95% to close at 6,806 roughly. Its first finish below the 7,000 mark in around 2 months. As fears about a semiconductor peak collided with fresh anxieties over the Iran conflict and a possibility of further US monetary tightening. Then on Tuesday, the session opened lower still, down another 0.5% to around 6,769, dragged by overnight losses on Wall Street. But then yesterday, again, the mood shifted quickly, and then by the mid-morning, the index had swung more than 2% higher. I think it briefly touched 6,980 as bargain hunters essentially moved in after the previous day's rout. Then that early rally didn't fully hold. The Kospi eased back, and then in the afternoon, I think closed the day up by 0.73% at around 6,856, still above the psychologically, I think, important 6,800 mark. But of course, when we look, that was, at least yesterday, Samsung Electronics and SK hynix, which had been up for as much as 5 or 6% in the morning. Then they also gave back some of those gains, closing the day around 3% higher on renewed late session buying. Then again yesterday, the tech-heavy Kosdaq told a rougher story and falling roughly 1.92%. Of course, these gains have, I mean, it's gone up a little bit more today, regained a little bit over 7,200, led by tech shares, of course. But I think when we look at what analysts are describing this, they're saying this is a kind of textbook case of an oversold market attempting to stabilize. with one researcher noting that the very factors that had powered the recent rally, the semiconductor upcycle, hopes for US-Iran ceasefire, and expectations the Fed would ease, have all flipped essentially into headwinds simultaneously at the same time, at least for now.
Right. Professor Oh, officials at the Bank of Korea, they're slated to announce their benchmark interest rate tomorrow. That's July 16th, Thursday. Many predict a rate hike. Do you share this outlook? And if that is the case, what are the economic implications of a rate hike?
Yes, the BOK will raise base rate, which is expected 0.25% hike to 2.75%, ending a 3.5-year pause. It will be to the point, and there are lots of economic reasons. Consumer price growth reached at 3.2% in June, already well over the 2% target rate, and the weakened won has intensified imported cost pressure, resurgent housing prices, and rising household loans. Now, let's take a look at the economic implication of the rate hike. More than anything else, increased interest payment will heavily impact on heavily leveraged groups. The benchmark increase will trigger chain reaction across the banking sector, lifting both fixed and then variable mortgage rates. Combined with recent major bank restrictions on the mortgage limits, higher rates are intended to curb soaring housing prices, particularly in the metropolitan areas like Seoul. A higher yield on the won is expected to help stem capital outflow and ease imported cost pressure caused by a strong dollar. While large export-driven corporations remained insulated by boom tech demand, sectors like domestic retail and risk-on asset markets may face downward pressure as the cost of capital increases. The BOK estimate that every 0.25% rise in loan rate increase annual interest burden by a total of 3.2 trillion won for all borrowers. It might be a kind of the deep impact afterwards.
All right, I see a deep impact. Well, the announcement on the benchmark interest rate will be made tomorrow, as I mentioned earlier. Raphael, the Finance Ministry, it's raised its growth projection for the South Korean economy for this year to a 5-year high. What's the forecast? What's fueling it?
Sure, yeah, the Finance Minister has raised its 2026 growth forecast to 3%. It's a full percentage point above its previous estimate and the strongest since 2021. That figure came out yesterday in the government's half-yearly economic policy plan presented at, of course, the cabinet meeting that was chaired by President Lee. The Vice Finance Minister Lee Hyung-il, I think he put it plainly, he said robust exports driven by the semiconductor boom are clearly an opportunity, but there remain challenges that the economy still has to overcome, of course. And the scale of the upward revision, I think it's quite noteworthy. The nominal growth, which captures price effects as well as real output, is now expected at 12.3%, the highest in 3 decades. And of course, behind this is an extraordinary run of chip exports. South Korea's exports broke, as I mentioned earlier, the $100 billion mark in a single month for the first time in June. And the semiconductors alone are accounting for roughly $45 billion of that. The government is also betting heavily on this continuing, essentially, and we've seen over the past few weeks, it's fast-tracking 3 so-called mega projects unveiled last month, covering semiconductors, AI data centers, and physical AI, and it has pledged to raise next year's budget spending by at least 10% to more than 800 trillion won. Of course, longer term, the ambition is captured in what officials are calling kind of 3-4-5 vision, again, lifting potential growth to 3%, pushing Korea into the world's top for exporters and raising per capita growth national income to $50,000, up from an expected $40,000 this year. I think the ministry itself has also raised inflation forecasts to 2.6%. So I don't think it's there's also, I guess, a bit of a downside. They cite the high oil prices because of the Middle East conflict, and it's planning fuel price caps and foreign exchange measures to measure the currency that's remained persistently weak in recent times. So I think it isn't all kind of upside from here.
Right. Staying with that tone of caution then, Professor, I wonder, what are the variables that could serve to challenge this growth outlook for the Korean economy this year?
The most important key variable would be a K-shaped division of industry between the thriving semiconductor industry and struggling traditional manufacturing sectors like petrochemicals and steel, alongside a slowdown in job creation limit domestic demand. Middle East geopolitical tensions would be the next. Korea remains highly dependent on imported Middle East energies. Prolonged conflicts could escalate crude oil prices, exacerbating inflation and putting downside pressure on the margins. And then what's next? Trade protectionism and tariff can never be forgotten. As an export-driven economy, Korea remains vulnerable to shifting trade environment. Washington's tariff policies and ongoing U.S.-China tension, and quite recently the EU's environmental regulations, such as ETS and then CSTDD, serve as a major external headwind to Korean economy. The legal landscape challenges following the implementation of the yellow envelope law, which adds fuel to subcontractor friction. Labor unions represent a highly disruptive and wildcard. Aggressive labor actions and wage disputes are hitting the very sectors driving the economic recovery in the second half of the Korean economy.
Right. Quite a number of challenges there, I have to say. All right, Professor, as always, thank you so much for your time and your thoughts today.
Thank you for having me.
And Raphael here in the studio, thank you very much for your time and your thoughts.
Thank you very much.
Right, on that note, we end this edition of Press Perspective. As always, thank you for watching. Do join us again same time tomorrow.